on all books, and there is an online subscription discount of 10%, 15% on 1 year and 2 year. So members can take the benefit. So after a wonderful first session, we have now the second session, which will be taken up by CA Nihar, and I request my colleague CA Viral to give a brief introduction of him.
Welcome members to the second session today. We have our speaker on dais, CA Nihar Dharod. He's a practicing chartered accountant and also holds a degree in Bachelor of Law. He's currently serving as the founder and principal at ExcelQuest Consulting Partners, a boutique tax and business consulting firm. Prior to this role, he was a partner and indirect tax head at Shah & Savla LLP for 6 years. He has also worked in various capacities in the indirect tax verticals of PwC and BDO for at least 5 years. He has more than a decade of experience in advising domestic as well as multinational clients in diverse sectors in the areas of GST, service tax, VAT, excise duty, customs, and foreign trade policy. His main areas of focus are multi-state pan-India GST litigation management, GST due diligence and health check reviews, indirect tax planning and structuring, indirect tax compliances, refunds, and business consulting for SME and MSMEs. He's also active in a lot of associations, and to name a few, he is a part of committee for MSME and startup of WIRC, elected committee member of Vikasa, managing committee member of CVO Chartered and Cost Accountants Association, and he also contributes his views through articles, comments in various tax publications, and is a regular speaker at various forums. With this brief introduction, we welcome you, Nihar Bhai. I would request CA Vipul Bhai to please present a memento on behalf of the study circle. I would request to also present a CABF receipt of Rs 500 on behalf of the study circle. With this, I think the stage is all yours.
Good afternoon, friends. So, first of all, let me thank the organizing team of Borivali Central Study Circle for giving me this opportunity to share my learnings with the fellow chartered accountants present here. It's indeed an honor to be on the dais, probably sharing a day as a speaker with stalwart like S.S. Gupta sir. I think when I started my career, probably I have started my career reading the books written by S.S. Gupta sir, and today after I think more than a decade sharing the dais or the platform speaking along with Gupta sir itself is a great pride moment for me. So thank you so much for that. Quickly going to the session, I think Gupta sir has this bit. Okay, thank you. So, Gupta sir has actually set the context for my session. Sir at quite a few moments mentioned that अपने को अपना argument बनाते रहना है, provisions के ऊपर दिमाग लगाते रहना है. And I think the entire context of that session has been set. And why do I say that is, today as a part of this session, what I'm actually going to speak is not about the refund provisions, etc., but I'm going to present 6 cases or issues that have come across during this professional journey of, say, whatever years. And we have tried and deliberated on these specific issues related to refund. Some of them could be during an academic discussion, and some of them are real cases which have come to us either as a part of a client assignment or some advisory, etc. So I guess the case studies have been circulated, right? So we'll quickly start with the case study 1. This case study is regarding the refund claim by the SEZ units. So facts of the case are, ECP Limited is an SEZ unit. It's involved into exports of cut and polished diamonds. During the financial year 23-24, more specifically the second half, which is after 1st October 23, it made various procurements from some GST registered vendors in the domestic tariff area. Some of these vendors were not clear pursuant to the amendment which came after 1st October 23, whether the supplies that they made to the SEZ unit were for the authorized operations or not. And therefore, in that confusion, they decided to charge GST to the SEZ unit, ECP Limited. Now, after analyzing the situation and after their own interpretation or maybe consultant advice, the SEZ unit thought that this ITC is eligible to them under the CGST, SGST and the IGST law, and therefore they claimed that ITC which was charged by the DTA vendors in their GST R3B. Being into the export, practically there was no output tax wherein this ITC could be utilized. So this remained accumulated and unutilized over a period of time. The finance head of the company thought that अब ITC पड़ा है तो क्या कर सकते हैं, refund ही ले लेते हैं, because anyway they are into exports. So they claimed the refund for that accumulated ITC, and when that application went to the jurisdictional officer or the proper officer, it got rejected. And the reason given by them was that because this ITC which you have accumulated or availed is not for the authorized operations, so you cannot be allowed to claim that refund. So they've outrightly rejected it. Now the query that has come before us is to deliberate whether this refund can be claimed by the SEZ unit or not. To give you just some brief background, there's a section 54, there's a section 89 as well, and rule 89. And in that rule 89, specifically there's a proviso which says that in case of supplies to an SEZ, the refund claim shall be filed by the supplier, right? And in this facts of the case, the person who's actually claiming the refund is actually a recipient, the SEZ unit itself, and not the supplier. So that's where their entire confusion and the issue around this litigation has come up. So questions before us for deliberation? Yeah. So first of all, what is the scope of section 16 of the IGST Act? This is where the root cause of the problem is. The amendment came in on 1st October 23, introducing the words authorized operations, and we'll go to that section and see how that has come in. And then the scope and coverage of section 16 of the CGST Act, which we were just deliberating in the previous session, session as well. And then moving on to the section 54, read with the rule 89, and try and see whether there's actually any barring or any restriction in this specific case, and whether the SEZ unit could claim the refund or not. So let's just quickly go through the legal provisions. So first and foremost, section 7.5 of the IGST Act, which talks about determining which are the transactions which are an interstate supply under the IGST Act. And the subsection 5 out there specifically says that supply of goods or services or both, subclause B in that, to or by an SEZ developer or an SEZ unit shall be treated as supply in the course of interstate trade or commerce. Given that background, we then move on to section 16 of the IGST Act, which says that zero rated supply means any of the following supplies of goods or services or both. The first part, A, talks about export of goods or services or both. That's not relevant for us, so we'll not be deliberating on that. And the B part says that supply of goods or services or both for authorized operations to an SEZ developer or a SEZ unit. Now these words for authorized operations have been introduced in the Act or the provisions with effect from 1st October 23. So prior to that, it's simply read as supply of goods or services or both to a SEZ developer or an SEZ unit. So a bit of a difference out here is that now in order to qualify for a zero rated supply, the supply that I am making as a supplier to an SEZ unit or an SEZ developer need to necessarily be for the purpose of authorized operations. And what do I mean by authorized operations? There's a section, there's an act for it, which is the SEZ Act, which prescribes, what will be the authorized operation, and we'll quickly go to that as well. Just seeing the other provisions of, section 16. Subsection 2 says, subject to the provisions of section 17(5) of the CGST Act, which is the block credits, credit of input tax may be availed for making zero rated supplies, notwithstanding that such supply may be an exempt supply. So it clearly says that if I'm making a zero rated supply, and by saying zero rated supply, obviously there's no tax that a supplier has to pay on that. The ITC of the inputs and input services or the capital goods will be eligible to me, subject to 17(5). So if it's blocked under 17(5), I anyway don't have the right to claim it. But apart from that, if it falls under section 17 and is not barred by section 17(5), then technically I can claim that credit. Then we have subsection 3. Now this again has been amended and substituted. So we'll discuss this post the amendment, which says that a registered person making a zero rated supply shall be eligible to claim refund of unutilized input tax credit on supply of goods or services or both without payment of integrated tax under bond and LUD according to section 54. And then there's a proviso which is talking about non-realization, etc., which is not relevant. So subsection 3 specifically is talking about a zero rated supply under LUT without payment of tax, in which case I would be eligible to claim the refund of the unutilized input tax credit. And then we have a subsection 4, which is talking about allowing a supply to an SEZ on payment of tax, in which case the refund will be claimed for the output tax which I'm going to pay on this zero rated supply. So subsection 4 says the government may, on recommendation of the council, specify by way of notification, one is the class of persons who will make a zero rated supply, and second is a class of goods or services. And we have a notification 1/23 IGST, again issued on 1st October 23, which is practically allowing all the goods and all the supplies except for certain specified goods, which is basically gutka, tobacco, and those kind of sin products. Now again here, the words that are used is on zero rated supply. So there's a stark difference out here. Earlier that was for export of goods, and immediately within a few days of this amendment coming in, they made a change and they made it for a zero rated supply. So by zero rated supply, we are talking about both the export of goods as well as the SEZ supplies. Now let's quickly go to the SEZ Act and try and understand, because the root cause of our discussion is the authorized operations, etc. So let's just try and understand how does the SEZ Act come into play over here. Because the CGST Act or the GST law is giving reference to the SEZ Act, and primarily we all understand that SEZ Act is the driving force for all the tax related benefits that are generally given, and it has an overriding effect in general. We have section 2 subsection C of the SEZ Act, which says that what is authorized operations. So it says that operations which are authorized under 4 subsection 2 and 15 subsection 9. Now what is this 4 and 15? 4 is about establishment of an entire SEZ zone by a developer, and section 15 talks about developing an SEZ unit within an already identified or notified SEZ area. So those are the two things those provisions are talking about. Now, overall, if you try and understand what is the purpose of the SEZ Act in itself to first, bring in. So when you look at the Act itself, the purpose, it says, it's an act to provide for the establishment, development, and management of special economic zones for promotion of exports and matters connected and incidental thereto. So that's what the purpose of the entire SEZ Act is. They want to identify certain areas which will be notified and developed as a special economic zone, and then pursuant to that, there is a section 7 in the Act which talks about providing certain tax benefits and other benefits that are given. So a lot of exemptions in terms of taxes, duties, cesses, etc. are available. For example, we have the customs related exemption. Earlier we had service tax, VAT, excise related exemptions and concessions available. And in GST also we have this section 16, which is allowing us zero rating for the supplies that I'm making to the SEZ units. Now, I'll just like to pause over here and try and deliberate what exactly do I mean by zero rating of the, the authorized operations, and what exactly are we trying to understand over here. When I'm talking about the section 16 and the zero rating, it is for the supply that I am making to the SEZ units or the SEZ developer. Now, whenever an SEZ unit is or an SEZ area is identified and a developer is developing an SEZ or a unit is set up into the SEZ unit, it is for a specified purpose, and that purpose is very well defined. It could be probably for the purpose of manufacturing, or probably for some KPOs, BPOs, some other processes, warehousing, etc. And those are very well identified and notified in advance. And when you want to even set up a unit out there, you have to very well comply with those guidelines, etc. And this entire benefit of having the authorized operations is conditional. So you want to set up something, if it's fitting into that SEZ criteria for the operations, then you can set up a unit into that SEZ. And because you're setting up into that SEZ, there's a condition attached that you will be getting the benefits of certain relaxations in terms of taxes and other benefit. Subject to that, yes, you will have to have a net foreign exchange surplus, etc., and various other caveats. Now, this entire purpose of the SEZ Act still remains that we want to have certain areas which are going to get certain fiscal benefits. And yes, very rightly so, because the entire objective is that you want to promote exports, and those units will primarily be engaged into export related activities. So that's the entire purpose. So now that we need to try and understand and correlate this with the IGST Act as well and the GST law, zero rating benefit is given for these supplies for the authorized operations. And rightly so is that when there is an SEZ unit, which is in general given a lot of fiscal benefits, if any procurement is being made by that SEZ unit or an SEZ developer, the idea is very simple, that the local taxes should not get burdened onto that SEZ unit, and therefore any supplies made to them is getting a zero rating benefit. And ultimately, whatever supply you make is going to be further supplied by the SEZ unit for the purposes of export. So being an exporter in general, with a mandatory condition, we are trying to ensure that the tax burden, the local tax burden, does not get loaded onto the SEZ unit. Prior to 11023, the words for the purpose of authorized operations or for authorized operations was not there, and therefore there were certain interpretational issues out there. But post 11023, the legislature is very clear that you would get a zero rating benefit only if you're supplying it for the authorized operations. And by goods, there's a specific thing that when the goods move in, you can take in things when it's for the authorized operations, and that endorsement, etc., happens by the SEZ authorities. And for the services, there's a standard list given, which I'm sure those who have practiced in service tax also know that there was a concept of A1, A2. वहाँ पे भी same था, authorized services थी. If you are an SEZ unit procuring certain services, you would get an authorized list. That similar thing has been continued. Right now we have a standard list of about, I think, 50 plus services which have been given as in general for the purpose of authorized operations. And in case you feel that there are more services which are not getting covered, you could apply to the SEZ authorities and include those services specifically for you. So in that case, when the supplier is supplying the goods to you or the services to you, he can avail the benefit of the zero rating. So this entire purpose of zero rating, etc., is from the supplier side, right? Keeping this thought in mind, now let's just try and see what exactly are we trying to understand when it comes to this specific case where the SEZ unit has availed the ITC. Now let's quickly deliberate upon section 16 out here. Section 16 is the main provision which is actually enabling provision to claim the input tax credits. Now it says, every registered person shall, subject to such condition and restrictions as may be prescribed, and in the manner specified in section 49, be entitled to take credit of input tax charged on any supply of goods or services or both to him which are used or intended to be used in the course or furtherance of business, right? So the definition or the, the enabling provision so that you can claim the ITC is that the inputs and input services, or the goods or services that you have received are in the course or furtherance of business. Now here is a stark difference between the zero rating provisions and the ITC provisions, and that we need to clearly understand. The zero rating benefit is for the purpose of authorized operations, and the eligibility of ITC is for or in the course or furtherance of business. So there is a difference between the two words, and technically I cannot assume that my business is for the purpose of the authorized operations only. Probably it is a scenario where a business is a bigger circle or a bigger area, and the authorized operations become a small subset or a part of that entire business operations. And a very basic example could be that in the authorized services list, there are say about 52 services, right? I may not have certain services specific because n number of services under the world or under the sky I can claim, and which are for the purpose of business. Example is web hosting services or search engine optimization services, etc., which are not specifically covered out there. But are they not for the purpose of business? The answer is yes, they are very much for the purpose of business, right? So section 16 allows me to claim the ITC if I am fulfilling this condition, and then the other conditions which we discussed on 16.2, 17.5, etc. Let's also try and understand the definition of business. Business has been defined under, so there's a typo error, it's section 2 of the CGST Act, subsection 17. Business includes any trade, commerce, manufacture, profession, vocation, adventure, wager or any other similar activity, whether or not for a pecuniary benefit. Then there's a subclause B which says that any activity or transaction which is in connection with or incidental to A. Then there is C which is talking about irrespective of the regularity, frequency, volumes, etc. And D talks about supply or acquisition of goods in connection with commencement or closure of the business. So if you look at the definition of business itself, it's quite wider, and it is not just restricted. If you have to specifically look at it from an SEZ unit perspective, it is not just only related to or connected to the authorized operations. It's a much more wider thing. And even so, even SEZ units are allowed to transact into transactions which are not for the purpose of authorized operations. Yeah, there are certain there are certain limitations that okay, I can do only till this extent, that extent, etc. But they very well become part of the business, and they are allowed to some extent, and in case they violate that, then there are penal consequences to that as well. Looking at from the income tax angle also, even if I'm drawing my P&L, technically all my expenses, whether or not for the authorized operations, are for the purpose of business, and I very well claim the deductions, etc., under the income tax law also. Now, having said all of that, let's just try and correlate these two over here, and let me just draw the difference that I'm trying to explain. Section 16 of the IGST Act is defining the zero rated supply or zero rating of a transaction from a supplier perspective. Whereas section 16 is talking about claiming of an ITC from a recipient perspective. Now these need not necessarily be the same in all transactions. And why am I saying so? In this very case, if the supplier does not feel or is not confident that my services to an SEZ unit are for the authorized operations, I have an option to claim the benefit of zero rating. So if I feel that this is not for the authorized operations, I may not want to take the risk and I would not want to take the benefit of zero rating, in which case I would very well go and charge the entire GST, right? So whatever applicable rate, 5, 10, I mean 5, 18%, whatever is the applicable rate, I would charge that tax to it. Now having charged that tax, now the ball is in the recipient's court. He has to now see that, okay, a tax has been charged to me. Am I eligible for it under the section 16 of CGST Act? So he will have to go through the lens of section 16 and section 17 of the CGST Act. And if the conditions or the provisions that are mentioned out there are fulfilled, he would very well be eligible to claim that input tax credit. So having said that, in this specific case, the suppliers did not claim the benefit of zero rating, whereas the SEZ unit has now, since the supplier did not claim the benefit, is now looking at it whether I'm eligible from section 16 perspective. The answer seems to be yes, and therefore they have very well claimed the ITC of the GST that has been charged on whatever input services that they have procured. Having claimed the ITC under section 16 now, let us then move forward to section 54. So section 54 says any person claiming refund of any tax interest, if any, paid on such tax, or any other amount paid by him may make an application within 2 years, etc. And then we have a subsection 3, which says that subject to provisions of subsection 10, which is on the unjust enrichment, a registered person may claim the refund of any unutilized input tax credit at the end of tax period. And then this is provided, refund of unutilized ITC will be allowed only in 2 cases. One, if it is zero rated supply made without payment of tax, and the second one is for the inverted duty structure. Now let's try and look at it from the SEZ unit perspective. I have claimed an ITC, that ITC remains unutilized and accumulated in my books of accounts. As an SEZ unit, am I doing a zero rated supply of exports? The answer is very well yes, right? I'm not looking at now at the transaction between a DTA supplier and SEZ unit. I'm now looking at a transaction where SEZ unit has made certain procurements. Some of them could be zero rating and the goods have come without any taxes. Some of these are these transactions that we are doing. And taking a summation all of that, there's an zero rated outward export supply transaction that has happened. Now, as an SEZ unit, have I made a zero rated supply of exports? The answer is yes. Do I have an accumulated have I claimed an eligible ITC? The answer is yes. Is that ITC accumulated and unutilized? The answer is yes. Now, having a yes in all of these 3 conditions, do I fall into 54 subsection 3? The answer seems to be yes, right? So I am eligible to claim the refund, and it says that the person may apply, may make an application. So it's not that every person has to, but yes, I have been given the right to claim, and claiming of refund is always optional. It's not mandatory, to be very precise. And then let's just look at the explanation to this section 54, which is defining the refund. So refund includes, again, 3 or 4 categories of refunds has been mentioned in that is inclusive definition. One is the tax paid on zero rated supplies, which is the tax we are talking by the DTA supplier to the SEZ unit. Now this is one tax which is included as a part of the refund. Or inputs or input services used in making the zero rated supplies. Is the transaction now we are talking that very same transaction, but now from a recipient perspective, is that I have procured certain input services for the purpose of zero rated supply. So these are 2 different things if you look at it from a supplier and a recipient perspective. While this may still be the same if you look at the whole, but again, based on that person, the person in the first case is the DTA supplier, the person in the second case is the SEZ unit. So to that extent, there's a difference that I'm trying to draw over here. And then there's a fourth, in between there's one which is related to deemed exports. And then there's fourth one, which is talking about refund of input tax credit as provided under subsection 3. So which we just discussed is the refund of accumulated input tax credit. Then we move on to the relevant date because we have to make the refund application within 2 years. So in this case, if I'm talking about a supply, if I am talking about from the refund to be claimed for an SEZ supply, then it will be 2 years from the date on which I'm filing the return. And if I'm talking about the refund of accumulated input tax credit, which is for the purpose of exports, then it is 2 years from the date of export, as has been defined. And for sea vessel, sea or air, there's a different thing, and for land, they have defined it separately. Now, having the statutory provisions in place, which is practically allowing me to claim a refund, now let's just look at the procedural part which has been provided under Rule 89. Rule 89 says that any person except the person covered under Notification 55 who wants to claim the refund of any tax, interest, penalty, fees or any other amount paid by him other than IGST paid on export of goods, which is covered under Rule 96, has to file a refund application in RFD 01. And then there's a proviso, which is, somewhere the root cause of this entire litigation or dispute or the issue that you may call. Provided that in respect of supplies to a SEZ unit or a SEZ developer, the application for refund shall be filed by the supplier of goods after such goods have been admitted in full in the SEZ for authorized operations and endorsed by the officer of the zone, or shall be filed by the supplier of service along with such evidence regarding the receipt of services for authorized operations. So here there are two conditions that I can see in this proviso. One is that the proviso is saying that if it is a supply for SEZ, then the refund claim has to be filed by the supplier and not the recipient. That being the first condition. Second condition is for the authorized operation. So I have to prove as a supplier that the supply of goods or services are for the authorized operation, and they have to be endorsed by the specified officer of the zone. So it has to basically be authorized or endorsed by the SEZ authorities. Now, having said that, let's just again take a step back and try and understand, am I claiming a refund for supplies to an SEZ unit in this case? The answer probably is no. Had I been claiming a refund of the zero rating, in which case the supplier wants to charge the tax and then claim a refund, in that case, I fit into this proviso. But in my case, what I actually doing is, the supplier is not wanting to claim any zero rating benefit and therefore is charging the tax. The SEZ unit decides to pay the tax to the supplier, and then the SEZ unit is claiming the ITC and now claiming a refund of the unutilized input tax rate. The entire picture or the color of the refund itself has changed. So probably I could look at a scenario where I don't fit into this proviso altogether. And if I don't fit into this proviso altogether, then I fall into the general provisions, which are very well common to any exporter which is into the DTA area, or probably it's an SEZ unit. How does it make a difference? And if that is being considered, then probably I fit into a case where, yes, the IT or the refund is eligible to me. Let us again just try and understand one more thing over here is, are we really trying to say that this is a refund not for the supply, or is it a refund in respect of supplies to the SEZ unit or not? See, this proviso is very specific related to the supplies, refund of supplies made to the SEZ, the tax charge or supplies made to the SEZ and the tax related thereto, where the benefit of zero rating has been taken. Because if you see the words used under the proviso, the subclause A and B is where it is supplied to SEZ for authorized operations, and there's a similar provision under section 16 of IGST Act which is giving the zero rating benefit. Now in those cases what happens is, and when you look at the subsequent rules, the sub rules of 89 etc., it clearly says that the supplier has to give a declaration that the SEZ unit has not paid the tax to them, so unjust enrichment has to be proved. So in those cases, rightly so, the supplier is claiming the zero rating benefit because he's charging the tax, not collecting the tax from the SEZ, and therefore the tax on that outward which he has charged but not collected from the SEZ unit, he's claiming a refund. This scenario is altogether different again, is because he's charging the tax to the SEZ unit and the SEZ unit is very well paying the tax to him. right? So technically, this is no more a benefit of zero rating, because under 16(4), I would pay, charge the tax, I would pay the output IGST on a zero rated supply, but would claim the refund. In this case, the supplier is not even intending to claim the refund. So I technically don't fall into this proviso altogether. Once I don't fall into the proviso, I very well come into the common category which I spoke to you about. And therefore, a view can be taken that even an SEZ unit could file a refund claim for all the ITC that they have, they are eligible to claim, they have claimed, and which remains unutilized or accumulated in the input tax credit ledger. Let me also draw a reference to the service tax provisions, and people who have practiced into service tax know that when you had an SEZ unit during the service tax era, there was a concept of A1 and A2 forms. So in A1, you would apply to the officer to say that, okay, you give me, these are the list of services and these are the list of service providers which are covered under the authorized operation. So you give me an upfront exemption. So अगर वो service और वो supplier of service, इन दोनों का नाम अगर A2 list में आ जाता था, so you could give it to that supplier, and he would not charge you any service tax for the supply of services or the provision of services that he has made to you under the service tax law. But if any of those would not get covered into that A2 list, the supplier or the provider of service would charge you service tax. The SEZ unit would claim the SINVAT credit of that, and then would again go back to the service tax authorities and claim a refund. And that process was very well common. In fact, you look at the SINVAT provisions, they were much more stricter because you had to prove an excess of input and output supply. Whereas in case of section 16, we are talking about a much more generic provision, which is saying that it has to be in the course or furtherance of business. You actually don't have to prove a one-to-one nexus between an input and output supply as far as the GST is concerned. So technically, we are at a much more better footing as compared to service tax law, and when service tax law itself also allowed a refund to the SEZ authority, units or the developer. I personally don't foresee a challenge why the department would want to reject or why an SEZ unit would not be eligible for refunds in such a cases. So having said that, let's just try and see if we have any judicial precedent. So we have 3 decisions of the Gujarat High Court and 1 of the Madras High Court. These are actually not very similar to the facts. So Britannia and Make Money are related to the refund of accumulated ITC claimed by SEZ unit, but these were ITCs claimed on the ISD invoices. So while the normal supplies were getting the benefit of zero rating, the ISD unit transferred certain input tax credit to the SEZ units as per the formula, and the SEZ unit availed it and then claimed a refund. So here the Honorable Court has held that the SEZ unit can very well claim a refund, but slightly distinguishing fact is that there they have analyzed it that okay, SEZ supplier has to claim a refund in this case, but practically there is no supplier in case of ISD invoices, and therefore SEZ unit can also claim. So slightly on a bit different footing. Again, Britannia case has been gone into SLP before the Honorable Supreme Court, so that is still pending. SE Forge Limited decision of the Gujarat High Court is on a very similar facts of our case, wherein the Gujarat High Court has relied upon the Britannia judgment, followed the judgment and said that a refund would be eligible. And then we have a Urjita Electronics, which decision of the Madras High Court. Here, the Madras High Court has made certain very good remarks out here, which I would like to just speak out, is that under section 7 of the SEZ Act, goods services procured from DTA area by SEZ units are exempt from taxes. Though IGST Act and the rules prescribe refund mechanism for suppliers, nothing bars the SEZ units from claiming refund when they have borne the tax incidence. So if the SEZ unit has borne the tax incidence, they can claim the refund. But yeah, they will have to again prove an unjust enrichment on 2 fronts. One, that they have borne the burden of tax, and secondly, that the SEZ supplier has not claimed a refund. So to that extent, the court has made a noting out there that these 2 things will have to be proved by the SEZ unit, and then therefore they could claim the ITC. So I think, are we all on the same page? Am I going fast, slow? Just let me know in case I need to stop anywhere. So So you have to ask the SEZ unit itself. They will provide you the list, and based on that you can determine whether it is for the authorized operation. Whenever the SEZ unit would procure from you, they would actually tell you that, okay, look, this is for our authorized operation, and therefore you supply it to us under zero rating benefit. And there's everything very well documented and notified in the SEZ units documents also. Yes, services, there's a standard list which has anyway been notified by the SEZ authorities, which is common all across India. And specifically, if any unit wants to go for any additional services, they could have those additional services approved under the list by the SEZ authorities, the local SEZ authorities. Sorry. करेक्ट या सो अभी वो स्टैंडर्ड लिस्ट है जिसमें फॉर एग्जांपल चार्टर्ड अकाउंटेंट सर्विस, कंपनी सेक्रेटरी सर्विसेज, कस्टम्स क्लियरिंग एजेंट सर्विसेज, बैंकिंग सर्विसेज, देयर आर अबाउट 50 plus services which have been notified. So if you are a supplier of those standard services, you anyway fall into the authorized operations, and therefore you can claim the benefit of zero rating. If you're supplying any other services, then you'll have to specifically seek the certain documents from the SEZ unit which says that the SEZ authorities have allowed me saying that these services can be procured for the authorized operations, or are for the authorized operations to be precise. For the goods, the answer is yes, because when the goods enter into the SEZ area itself, there's a stamp which is given by the SEZ authorities. So to be very frank, if that documentation is not available, there is some bit of a challenge to prove that those goods supplied are for the SEZ authorized operations or not. As far as services are concerned, I don't think so there's any endorsement or stamping that is happening. Neither it was happening anytime under the service tax law, nor it is happening, because there's a standard list. If you have a contract and the invoice itself mentioning what services have been procured, I think you very well get qualified for the zero rating. Yeah. Can we move to the next case study? Sorry? Yes, as far as the goods are concerned, because you'll have to prove that the goods have gone into the SEZ in full. If you read the proviso, see, it says that the goods have been admitted in full in the SEZ for the authorized operations. So admission का proof एक होगा कि वो SEZ authority ने उस पे endorsement किया है that this specific invoice के अंदर के goods have entered the SEZ area. So that's kind of a third party or an independent proof that. So in a normal case you would say कि आपको receive हुआ है उसका क्या proof है? You say LR है. E-way bill is not considered to be a proof of receipt, right? You say LR probably is a much more stronger evidence or a document to say that you have received the goods. Similarly for SEZ, apart from LR, the SEZ stamp or the endorsement is what would prove that the goods have actually moved inside. So moving on to the next case study. So in this case, ECP Limited is a trader of goods, both domestic as well as export, and they do the exports under the LUT. The GSTR 3B of March 2019 was filed on 15th December 2019, so that's beyond the time limit of September, which was the interpretation earlier. And ECP Limited had accumulated ITC of March 19. After filing the return, and because they had certain accumulated credit, they filed a refund claim in January 2020. That's immediately after a month. The proper officer rejected the refund claim, stating that you have availed the ITC beyond the time limits of section 16(4). So therefore that ITC itself is not eligible. अब ITC eligible नहीं है तो refund तो scope ही नहीं है देने का. So refund got rejected. Then the officer issued a show cause notice to the company saying that, look, this ITC itself is ineligible under section 16(4). So here I am coming up with a demand under section 73 for reversal of the input tax credit which is not eligible to you. They confirmed the demand out there. After issuing the show cause notice, the assessee replied and they confirmed the demand that nothing doing, ITC is ineligible. Now in this facts of the case, what has happened is the company did not file an appeal against the refund rejection order, but filed an appeal against the demand order for ITC reversal and continued that litigation. Having said that, we all know that there is a 16(5) which had been introduced recently, which gave a life to all these late claimed, apparently late claimed or ITC which apparently is ineligible. And the appeal order came for hearing in March 2025. The appellate authority noted that now there's a section 16(5) which has been introduced retrospectively. And having said that, the appellate authority only had to do was acknowledge that and say that ITC is no more ineligible pursuant to the amendment which has been brought or introduced. And the demand was dropped. Now that the demand was dropped, the ITC of March 19 probably even thereafter business continued, but the ITC remained accumulated as of now as well after March 25. So the query that has come from the company is that can we now claim a refund for that ITC which for March 19 which was earlier disallowed to us, and therefore we did not contest the refund claim, but can we now claim the refund because now we have an order which says that look, ITC is eligible to you. Now if the ITC is eligible to me, I should be getting that refund which was rejected earlier. So the questions or the issues for us before us as for deliberation is whether refund can be claimed under section 54 for this specific case, and if yes, then is any time barring, because we all know that refund has a time limit of 2 years. So whether any time barring would hit us. Any views from the members present, whether I can claim the refund? If yes, no. If yes, then whether will there be any time limit of 2 years? Because we are talking about a refund claim filed in March or Jan 20, and we are today in 2025, so which is almost 5 years, way beyond the extended time limits of COVID as well. So let's just look at the section 16(5) which has been introduced. So section 16(5) says that notwithstanding anything contained in subsection 4, which was the root cause of our problem or the issue, in respect of invoices for FY 17, 18, 18, 19, 19, 20 and 2021, registered person shall be entitled to ITC in any return, to take input tax credit any return under section 39, which is filed up to the 30th day of November 21. So that time limit extension was given, and therefore any such disputes actually got a lifeline, and those disputes technically got settled. And this amendment was brought in with a retrospective effect from 1/7/2017, that is the day first itself. And then we had a notification 22/24 central tax, which talked about a special procedure. So in case you had any order, an adjudication order or maybe an appellate order which was pending, or maybe issued but pending before the appellate authority and stuff like that, then you could actually apply for a rectification of that order and could get a benefit out of it. However, if you have anyway paid certain taxes, then the Finance Act had a provision which said that refund would not be eligible to you in those cases. So we have a section 107 which is for appeal to the first appellate authority, and relevant for our case because we are talking about a case of appeal before the first appellate authority and their order thereof. So it says, subsection 1 says, any person aggrieved by any decision or order passed under this act or the state or union territory act by any adjudicating authority, which is the first level authority, may appeal to the appellate authority within 3 months time period. And then we have a subsection 11 which says that appellate authority shall, after making such further inquiry as may be necessary, pass such order as it thinks just and proper, confirming, modifying or annulling the decision or order appealed against. So either it could confirm that okay, yes, ITC ineligible hai, या उसको वो मॉडिफाई कर सकता है या उसको एनल कर सकता है, मतलब उसको रिवर्स कर सकता है. But it shall not refer back the case. So, I mean, that is not relevant for us. But here what is important is we have an appellate order which is practically modifying or annulling, saying that, look, there was a previous rejection or a demand order. Now I have a section 16(5). So the relevance of that order is no more there, and therefore I'm annulling the order, or I'm modifying that order to that extent. And the order has to be in writing, so obviously it will be in writing, giving the reasons for it. And if not appealed against before the higher authorities, that to that extent becomes final and binding on both the parties. So be it the taxpayer as well as the department, it becomes binding on both of them. So both of them have to comply. Section 54 is the provision that we want to discuss right now. So again, coming back to that provision, and probably in each of these case studies we'll time and again review the provisions. So it says that any person claiming a refund of any tax, interest, etc., may make an application, sorry, not shall, it's may make an application before expiry of 2 years from the relevant date. So while in this case, we are clear that a refund would be eligible to me, and the refund that I'm talking about is probably the accumulated ITC or the tax paid on or on the inputs and input service used for the zero rated supply. So refund is eligible to me. That's not a very disputed point, but I need to understand whether, I am whether into the 2 years of time limit that has been prescribed. And I have a subsection 3 which allows me refund of accumulated input tax credit. Now let's just go back to the relevant date definition. So probably here 2 types of relevant date would be applicable to me. The first one is in case of goods exported out of India, where the refund of tax paid is available. In this case, exports of goods, or in case of exports of goods, 2 types of refund are eligible to me. One, in respect of the goods themselves, which is the IGST that I have paid, or the input services used in such goods. So these are the 2 types of refund that is eligible to me. And in which case the relevant date, if the goods are exported by sea or air, it will be when the goods are loaded onto that vessel or the aircraft. And if it is exported by land, then it passes that frontier. So, and for post there's a separate timeline given. So if I am technically claiming a refund of the accumulated ITC or the tax paid on input services, what I am actually time limit that I am required to look at is from the date of that export, when the goods have been loaded onto the ship or vessel. That being the case, probably this is a case of March 19. If 2 years from that, then the time barring technically applies to me, and I am barred by the limitation of time. But if you look at a subclause D out there in the explanation, it says that in case where the tax becomes refundable as a consequence of a judgment, decree, order or direction of the appellate authority. Now this is where one needs to really put their minds and see whether my case falls into this category or not. Generally what we understand is that refund as a consequence of an order मतलब क्या होगा, एक order में मेरे को refund मिलेगा, maybe appellate order होगा या जो भी होगा, उसमें मुझे refund मिलता रहेगा, तो मैं इसमें apply करूँगा और वो order के date से. But if you read at the words, and like Gupta sir also said that you need to see what words are hurting you or what words are benefiting you, and try and deliberate and see whether you can make a case out of it or not. Now in this case, probably I could say that the tax becomes refundable to me as a consequence of that order. And what do I mean by as a consequence of that order? This order of the appellate authority said that ITC is eligible to me, right? Which was the moot problem out there. I was not eligible for that refund because the ITC was not eligible to me at that point in time. Now the appellate authority is saying that, look, ITC is eligible to you. And I have an appellate order available with me, which is saying that this ITC is eligible to me. The moment the ITC is eligible to me, can I now say that, look, if the ITC is eligible to me, then the refund is also eligible to me. And therefore, I try and draw some relevance or some connection out here to say that, look, I have A, which is also applicable to me, and I have a subclause D, which is also applicable to me. And we all know that there is a legal principle which says that if you have two or more conflicting provisions, then one which is more specifically applicable to you, you'll have to try and interpret it in that fashion. And therefore, can I take a view or can I try and make a case out saying that, look, this refund is eligible to me because of this order, and therefore this is more specific relevant date which applies to me and not the one which, while A also applies to me, but this is what is more specifically applicable to me, and therefore I should be allowed a refund within 2 years from the date of this order. That's something which will have to be tested in the court of law, but probably something which we really need to think and ponder upon. Additionally, one could also look at some decisions which are relevant and which are related to the GST era itself. The first two are the HK Enterprise and the Ascent Meditech. These were both related to the inverted duty structure. I'm sure all of you all know that the inverted duty structure formula had undergone an amendment post the Supreme Court decision in the VKC footsteps. And therefore, these parties had earlier applied refund before the judgment came in or before the amended formula and got a lower refund. Subsequently, the formula was changed or amended, and therefore now they would be eligible for an additional refund. So the parties went on and applied by way of making a supplementary refund claim, saying that, look, the formula has been amended and this amendment is clarificatory in nature, and therefore we are eligible for the additional refund or the supplementary refund. And therefore, since our original refund claim was within the time limit, we have a decision of VKC footsteps by the Supreme Court, and there's an amendment in the formula. So therefore, now we should be eligible for that additional or a differential refund claim. And the Gujarat High Court held in the favor of the assessee, saying that since the original claim was also within the time limit, and obviously holding that this amendment in the formula is more of a clarificatory nature and therefore should have a retrospective effect. And the assessees, because they had complied the time limits of refund in the original refund claim, they should be eligible for the additional refund. Revenue went before the Supreme Court against this decision, and the case has been dismissed. So technically this is the law of the land as of now, I mean as far as this decision is concerned. Now, can I draw references from this decision? Now, this is not exactly same facts, but can I draw references saying that, look, there is a retrospective amendment which has come into the provision. My original claim was within the time limits of 2 years. Then there was a retrospective amendment, and I have an appellate order. In the previous case, it was a Supreme Court order. Now I have an appellate order, and therefore I am now eligible for the supplementary refund claim. I'm not saying I am going for a new refund claim, but a supplementary refund claim in terms of that original refund claim. Maybe some persuasive value that decision will have. Second is the Tirth Agro decision, which is related to the refund of the ocean freight. So we all know Mohit Minerals' decision of the Honorable Supreme Court, where the notification demanding RCM tax on the ocean freight was set aside. And therefore, this party applied for a refund for that tax paid under RCM on ocean freight, and the Gujarat High Court has allowed that refund over there. So slightly different, but I'm saying that probably there is a decision. So again, the decision was not in specific to this assessee, but there was a general decision or a common issue. Here's only distinction factor or distinguishing factor would be that this is a case related to taxability, where originally the constitutional validity of the demand for tax under RCM on ocean freight was challenged, while the constitutionality has not been it has been upheld, it has been held, has not been disputed, but rather they have struck down that notification itself. So in that case, probably slightly distinguishing, but maybe some persuasive value to try and say that, look, our case could also try and fit into similar category and should be tested in the court of law. Only time will tell whether we'll be getting this refund or not, but worth an attempt for sure. Moving on to the next case study. Yeah. Correct. So, sir, I'm talking about section 16(5), which retrospectively allowed the ITC claim for the delayed filing. So while the original dispute was that, but because that retrospective amendment has come in, so now my late filing is also regularized to that extent. And therefore now the entire litigation for getting the benefit of refund. Case study 3 is on refund for SEZ supplies. Now, slightly different from the first, or rather inverse of case study 1. Here, ECP Limited is a SEZ unit, is a supplier to an SEZ unit. It has made a supply to the SEZ unit, and the contract was that they would charge the GST, SEZ unit would pay the GST to them. So technically, this is again not a case where the supplier intended to claim the zero rating benefit and claim the refund. Payment terms were that you would pay me the GST amount as well and you would claim the ITC, whatever you want to do, that SEZ unit to decide. Post sale, certain financial issues happened with the SEZ unit and they were into some stress. So therefore, they were not able to pay the amount. After multiple follow-up also, they could barely pay the base amount, but the GST amount was still pending. So the SEZ unit came up with an idea. They said, look, I will give you a declaration that I have not paid the tax to you and the provisions are allowing you the refund, so why don't you go and claim the refund? Now, practically at the time of supply, I did not claim the zero rating benefit to that extent. I mean, I did not intend to. Technically, there's no way in which I report कि मैं ये zero rating का benefit ले रहा हूँ, नहीं ले रहा हूँ. But at that point in time, the understanding was in my books of accounts also, I showed that 118 is receivable from the SEZ unit. Normal cases में होता है, you show 100 receivable from the SEZ unit, 18 is the GST refund which is receivable. So I had shown 118 receivable from the SEZ unit. So the SEZ unit proposes से that look, मैं तो नहीं पे कर सकता हूँ, आप जाके गवर्नमेंट से refund ले लो, 18 रुपये आपको वहाँ से आ जाएगा. You are anyway done good for whatever 18 rupees you want from me. I need not pay that GST to you and case close हो जाता है वहीं पे. So both are happy and it's a win-win situation for both of us. So therefore now as a supplier to the SEZ unit, the case is before us whether the SEZ unit can in this case claim a refund which earlier it did not intend it to. So first is whether such refund can be claimed under section 54 and second is at what point in time you need to prove. See 54 में refund मिलेगा, that's no brainer. ठीक है, I think we've discussed that in detail in section 54 जहाँ पे हम reverse case में जा रहे थे कि SEZ unit ले सकता है, तो supplier तो for sure ले सकता है, but again for supplier to claim the refund for a supplier to SEZ, he has to prove an unjust enrichment which is under 5410 which says that I have borne the burden of tax. Now in this specific case in my books of accounts, the burden of tax has already been passed on to the SEZ unit because I am saying that this tax is recoverable from them. His ledger also shows 118 payable, my ledger also shows 118 receivable. So technically under the commercial parlance, that burden of tax has already been passed on to the SEZ unit. I am no more bearing the tax cost of this case. And therefore, when do I determine or when do I prove the unjust enrichment? Do I prove the unjust enrichment at the time of supply? Or do I prove the unjust enrichment at the time of making the refund application? That's, I think, the moot cause or the moot issue that one needs to deliberate. So again, section 16 talks about zero rating for the authorized operations, etc. I think I'll not go into the deliberation of it because we've already discussed it in the first case study. So again, now let's look at section 54. So while section 16 qualifies this as a zero rated supply, and therefore now if I have to claim any refund for a supplies made to the SEZ unit, 54 talks about application has to be accompanied by certain documentary proof. And one of those documentary proof is that such documentary or other evidence as the applicant may furnish to establish that the amount of tax, interest, if any, paid on such tax or any other amount in relation to which the refund is claimed or was collected from or paid by him, and the incidence of such tax and interest had not been passed to any other person. Now we have a situation here where initially when I supplied the goods, the burden of tax was already passed on to the SEZ unit, whereas now when I'm wanting to claim the refund, I'm saying that look, now the burden of tax is on me because वो तो मुझे tax नहीं दे रहा है, but मुझे refund लेना है, while my transaction still qualifies at zero rated supply. And then we have a subsection 8 as well, which says that notwithstanding anything contained in subsection 5, a refundable amount shall be paid to that person and not to the, not to the credit of the fund, which is the fund which, in case you are not able to prove the unjust enrichment, the government is not allowed to retain that amount, but will transfer it to the consumer welfare fund. So in this case, if I have proved that the incidence of tax has not been passed on by me to any other person and I have borne that burden of tax, then I will be eligible to get the refund, and the refund amount will credit it back to me either in cash or to my credit ledger. Then we have 89.1, which is talking about the refund eligibility. We've seen this proviso. And then we have the documentary evidences under the sub-rule 2. And specifically is the clause F out there, which says that a declaration to the effect that tax has not been collected from the SEZ unit or developer in case where refund is on account of supply or goods or services made to the SEZ unit or an SEZ developer. So now the question comes back is, when do I prove the unjust enrichment? Do I need to prove it at the time of supply or is it at the time of refund application? Logically, so you have to prove it when you're filing. So when I am filing the refund application, the government wants me to prove that, look, I have not or I am not falling into that unjust enrichment. I have borne the tax. I have not collected from any other person, and therefore now I am eligible. So sacrosanct, once I qualify under section 16 as a zero rated supply, going by section 54 and rule 89, I am eligible for refund as a supplier to an SEZ unit for authorized operations after 11023, for all before 11023. But if I am able to prove it along with the documentation, probably a good case to say that refund will be eligible to the SEZ supplier to an SEZ unit or a developer in this case. So I think the view that would, just one second, the view that would come out here is that unjust enrichment will have to be proved at the time of refund application and not necessarily only at the time of supply. Yes. Technically, whenever you're doing an on-payment supply to an SEZ unit, it's a normal INR tax invoice, so you always charge tax. You report it with tax also. In your GSTR1 also, it is reported as a B2B supply with the tax amount reported out there. Correct. That would help provided you are within the time limits of section 34, that option is available, but we are talking about a case which is beyond the section 34 limit as well. So then वो 6 महीना या 1.5 साल का टाइम है, बट उसके बियॉन्ड का टाइम अगर आपका है, स्टिल इफ यू आर फॉलोइंग विद इन द 2 years, then can I explore the refund option or not? But yes, section 34 will help, and you can claim, you can issue a credit note as well for that matter. Any questions on this, or can we move to the next case study? Case study 4 is on a tax adjustment and a refund, a very unique case, I would say, but very interesting one. So ECP is a manufacturer of agrochemicals, and agrochemical business, as we all know, is very seasonal. A lot of sales happens during the monsoons, and then when it's not the crop sowing season, the business is quite slack otherwise. So in order to boost the sales, the general marketing tactic is that you dump all your goods, majority goods at the distributor level, and generally you offer them a very good price, and there's always attached condition, माल अभी ले लो, नहीं बिका तो हम वापस ले लेंगे, हम बैठे हैं, ठीक है? So what has happened in this case is during the year financial year 18-19, they did a lot of supplies to these distributors with the condition that goods can be, I will be taking the refund back. I would be taking the goods return. And as on March 19, when the goods actually came back post the end of the season, there was a negative turnover of 50 lakhs. So probably we are talking about a sale of 30 lakh rupees, a return of 80 lakh rupees. So there's a net negative turnover for that specific month for 50 lakh rupees, along with an 18% GST thereof. And we all know that negative reporting in the turnover was not allowed in those times. So therefore, in the March 19, GSTR1, the credit notes were reported. So GSTR1 showed a negative turnover, but 3B could not show a negative turnover. So the turnover reported in 3B was 0, right? And logically, ideally, the assessee had to adjust this net negative amount in the subsequent months. However, they forgot to adjust it up till September, and they realized it at the time of March 20. So they adjusted it in March 20. Again, difference in 1 and 3B for March 20. So a notice came for financial year 1920. And the officer demanded the tax for 1920, saying that, look, this adjustment which you made in March 20 is not legally right. It's beyond the time limit of section 39. You are allowed only till September. So therefore, you need to pay this tax which you have adjusted wrongly, because 3B में short payment हुआ है as far as 1920 is concerned. 18-19 का मुझे कुछ लेना देना नहीं है, वो टैक्स आपने ज़्यादा भरा नहीं भरा, उसका रिफंड मिलेगा नहीं मिलेगा वो आप देख लो. But as far as this matter is concerned, I want a demand. I want a tax payment thereof. Interesting case. So the CFO comes up with this very good idea. He says that, look, amnesty scheme तो available है, 19-20 का demand है, भर देते, interest penalty तो waive off हो जाएगा, और 18-19 में जो extra tax भर दिया उसका refund ले लेते हैं. 2-4 महीने का 6 महीने का working capital blockage होगा, but at least if I can buy peace as far as the tax demand is concerned, I don't want to litigate further. Now, can you explore whether I can claim a refund of this tax negative turnover which did not get adjusted? So technically there's a excess tax payment, right? Because my turnover as per GSTR 1 says 100, but the tax paid in the 3B for the 12 months of financial year 18-19 hypothetically is 120. So there's a 20 rupees of excess which has got reported in GSTR 3B on a totality basis. So can I claim the refund of that? If yes, then let's explore the amnesty scheme. So couple of questions here. One, let's also try and deliberate this issue from section 34-39 perspective, whether this adjustment which is first getting disputed is right, wrong, yes or no. Then if that is right, wrong or not, then whether I can go for 54, etc. and whether 2 years time limit would apply or not in this case. So let's just look at section 34. 34 is talking about issuance of credit notes. So it says that any registered person who issues a credit note in relation to a supply of goods or services or both shall declare the details. Now very important, shall declare the details of such credit note in the return for the month during which such credit note has been issued. Now this is where the entire discussion and confusion starts, and I'll just take you on that confusion in couple of slides. And then there is a time limit that provided you cannot report it beyond 30th of November, and in those days it was September, etc. Right? And then you have section 39, which is related to your returns, which is GSTR 3B. It says that where any registered person, after furnishing a return under 1, 2, 3, 4 and 5, different types of returns, normal, quarterly, monthly, composition, etc., etc., discovers any omission or incorrect particulars therein, then he can rectify it, such omission or incorrect particulars in the subsequent. However, there also they have put in a time limit ke beyond 30th November or September जो भी date था, उसके beyond आप adjustment नहीं कर सकते हो. Now let's go back again to section 34. It says I have to declare the details of such credit note in the return. Okay, so one is I have to declare details of the credit note and in the return. Now these are two things which is important. Now let's understand. So we have chapter 9, the chapter which is talking about returns, which has section 37 to 48 in the Act, CGST. 37 is the section which is prescribing GSTR 1. 39 is the section which is prescribing GSTR 3B. If you read at the terms that are used in 37 and 39, 37 nowhere in the entire section 37 says that GSTR 1 is a return. It just says as to declare in form GSTR 1, statement in GSTR 1, whatever, those kind of words. Whereas section 39 clearly says that the assessee has to file a return in GSTR 3B. Okay? So there is a difference. 37 is not saying that GSTR 1 is a return, but 39 is very specifically saying that the return is 3B. Then we are talking about again section 37 and 48. 37 talks about that the details of tax invoice and the credit note has to be reported in 37, which is GSTR 1. And 3B does not talk about reporting or declaring any details. Now let's go back to 34. One, it is saying that I have to report the details. I report the details in GSTR 1, which is not a return. But it is talking about declaring the details in a return. Now return is a 3B where I don't declare any details. So whether the first issue is that whether if I have to really find a way out of this problem, where they are saying that in my case, I have reported it in GSTR 1. Adjustment was pending in 3B or could not happen within the time limits that they are talking about. So my first argument or my only way out would be कि मैंने क्या सही किया है, मैंने 1 में ठीक से report कर दिया है, मैंने details वहाँ डाली है. So I need to ensure that to qualify under section 34, I have to prove that I have declared the details and those details are declared in the return. But the return is not section GSTR 1 as per 37, it is 3B as per section 39. So what way out do I have in this case is that I go back to the principles of legal interpretation, which says that even the chapter headings have a value and has to be, the sections don't need to be read in isolation, they have to be read in conjunction with the chapter heading or the chapter names, etc. And therefore when the chapter 9 itself is talking about returns, I could very well say that look, GSTR 1 is also a return. And to also to support my argument, there are n number of cases where the department has gone ahead and asked for late fees for late filing of GSTR 1. Now late fees under the section is applicable only for late filing of returns. If the department is demanding late fees on late filing of GSTR 1, department itself is confirming that GSTR 1 is a return. So whether or not they write it, one, the legislature in its wisdom, when it put section 37 and the form GSTR 1 under the chapter of returns, even in the act, even under the rules, it very well intended that GSTR 1 is also a return. And the executive authority, which are the department, when they are demanding late fees during assessments and audits for late filing of GSTR 1, they are very well abiding with that view that GSTR 1 is also a return. So technically, I am qualifying under section 34. I have reported my credit note on time. I have not complied, or I am not non-compliant as far as section 34 is concerned. Now let's look at 39. It says that where registered person discovers any omission or incorrect particulars therein. Have I actually done any omission or incorrect particular as far as my 3B is concerned of March 2019? The answer is no. I was required to report a turnover which was a negative turnover, which the 3B did not allow me. So have I actually omitted anything? Answer is no. At max I could report was 0. I reported that. Is there any incorrect particular therein? Answer is no. Because max में 0 ही report कर सकता था, उसमें कुछ incorrect है नहीं. हाँ, I could have, I had the right or I had an option. And if you go back to the circular also, if I'm not wrong, there was a circular in the initial years, if I'm not wrong, 17 by 2017, I'm not able to recollect the number, which talked about issues of differences between GSTR 1 and 3B, etc. In that case, there was a scenario where you had over-reported your tax liability. So there, the circular also said that you may adjust in the subsequent returns or claim a refund. The circular itself was saying that there was an option given to the taxpayer. So if I have not adjusted, I could very well go and claim a refund. So technically speaking, I would also go on to argue and say that this is not a case of omission or incorrect particulars, and therefore, frankly, this time limit of 39.9 would also not apply to me, and therefore I would still be eligible to adjust it at a subsequent point in time also. That's also a bit aggressive, but yeah, probably one could look at doing that. And then let's go back now to section 54. Again, if I'm saying that there is an excess payment on a totality basis, I have made a payment of tax. Now, what is the relevant date over here? Logically, it is an excess payment. In that case, the relevant date defined is the date on payment on which the payment has been made. Have I actually made a payment? The answer is no. Because I had to actually adjust it. I did not adjust it, and therefore on a totality basis, there is a net. On a summation basis, there is an excess payment. I have not actually made an excess payment. A positive act of payment has not been made. Even if I assume that there's a positive act of excess payment made, when is the payment actually excess made? Is it March? Answer probably is no. Can I say September because I had the time limit up till September? I mean, overall the answer seems to be no. So I think the machinery provision are also kind of not covering my case. However, I think not getting into that legal dispute of relevant date, etc., Article 265 of the Constitution itself comes to our savior, which says that no tax can be collected without the authority of law, and it's a settled principle that if any excess tax payment has been made, the government cannot retain it, and therefore if that can be proved along with the unjust enrichment, the department will very well have to refund it to us. A couple of judgments over here that I have mentioned. Most important that I would like to draw your attention is to the Mafatlal Industries, which is a classic decision on the refunds, etc., and the right, whether refund is a right or remedy, etc. So where, the Honorable Supreme Court has held that even in these cases, so basically they tried to divide the refunds into three categories. One, which is an unconstitutional levy, which is never envisaged under the law, because the law, when it is demanding the tax, is always with an assumption that the demand is within the framework of law. So if an unconstitutional levy is there, probably we are talking about a scenario where the machinery provisions of the law for refund would not apply, and the refund does not come from the provision or the act itself, and therefore probably unjust enrichment, etc., would not apply to that case. Whereas in the second case, which is basically where the demand has been made due to a wrong interpretation or a misconstruction of the provisions of the law, in which case the machinery provisions are available within the law, and in which case we will have to comply with the unjust enrichment provisions. And third is where I have made a payment by mistake of law or maybe an error or whatever procedure could be there. Even in those cases, I will have to prove the unjust enrichment. So probably a refund for sure is eligible in this case, but I will have to prove the unjust enrichment to that extent. Next, interest on delayed refunds. We have 10 minutes. Yeah, so I think I'll quickly sum up. So interest on delayed refund, classic case. Interest आज तक कभी किसी को मिला नहीं है. I was just discussing with my friend Manan on the way कि refund मिलता है या नहीं मिलता है. He said मिला तो नहीं आज तक, मुझे भी नहीं मिला है. So anyway, the facts of the case are company filed a refund claim. Refund was rejected at that point in time. It went into an appeal. So 3 years के बाद वो refund order के against का appeal favorable आया. And the assessee then filed another refund application saying that pursuant to this appellate order, now this original refund is eligible to me. So please allow me refund. And within 60 days of that appellate order, मैंने refund apply किया और मुझे 15 दिन में refund मिल भी गया. But the refund, the proper officer or the adjudicating authority did not allow a refund, interest on that refund. Now मेरा refund था 2022 का, मेरे को मिला 2025 में, मतलब 3 साल के बाद मिला है, but interest नहीं मिला. So statutory auditor says that look, refund is your statutory right, तुझे मिलेगा, you should accrue that income. Interest is eligible to you, so you account for it in your books of accounts. And therefore the question before us is whether the refund will be eligible to me in this case or not. And how does one interpret the explanation to section 56? So let's just look at section 56 over here. If any tax ordered to be refunded under 54(5) to any applicant is not refunded within 60 days from the date of receipt of application under subsection 1, interest at rate not exceeding 6%, etc. will be paid on the recommendation of the council for the period beyond 60 days from the date of receipt of application till the dates of refund of such tax to be computed in such manner, etc. And then there is a proviso which says that provided where any refund claim arises from an order passed by an adjudicating authority or an appellate authority or a tribunal or a court, which has attained finality, matlab no further appeal has gone there, and the same is not refunded within 60 days from the date of receipt of application filed consequent to such order, interest at such rate not exceeding 9% as may be notified by the government shall be payable in respect of such refund from the date immediately after expiry of 60 days from the receipt of application till the date of refund. So this is where the entire root cause, and then we have an explanation which says that for the purpose of this section, where any order of refund is made by the appellate authority, tribunal or court against an order of the proper officer under subsection 5, the order passed by the appellate authority shall be deemed to be an order passed under subsection 5. So explanation says that the appellate order will be deemed to be that order under 54.5. And now if I look at 56, which is saying which is the refund order under 54.5, it is the appellate order. So at max refund मुझे मिलेगा भी तो क्या मिलेगा? Date of application after the appellate order to the date on which refund is received. अगर वो delayed है तो, right? वो 60 days वगैरह का criteria. So we are technically in a loop or a deadlock that मुझे इस case में refund मिलेगा. Logically speaking, my original refund claim was in 22. I'm getting the refund in 25. So 3 years, a legal refund has been denied to me due to whatever reason, the interpretation of law or whatever could be the case. But the refund has actually been denied to me. And therefore, logically speaking, the interest should be given to me. But if you look at the provisions of the law, it seems that difficult case. However, we go back to the predecessor law or erstwhile laws from where the genesis of GST comes, which is the excise and the customs, which is still applicable right now. Exactly similar worded provisions even there. So thought came to me that अगर same provisions वहाँ पे थे तो वहाँ क्या view था या वहाँ पे क्या हुआ था. So there are few decisions over here. One is the Bombay High Court decision in case of Ballarpur Industries, Ranbaxy Laboratories, Supreme Court decision. And this was again Bombay High Court decision was approved in the Ranbaxy Laboratory decision. So where it has been held, so I'll just read out the Supreme Court decision. Section 11BB is the section that was there during the excise. So it says that Section 11BB of the Act comes into play only after an order of refund has been made under Section 11B of the Act. And in that case, it lays out that whatever refund amount is found payable, if the duty is not refunded within the period of 3 months from the date of receipt of application, etc. So the Supreme Court in this decision has noted the explanation appearing below proviso to 11BB introduces a deeming fiction that where the order for refund of duty is not made by the Assistant Commissioner of Excise but by an appellate authority, then for the purpose of this section, the order made by the appellate authority or the court will be deemed to be the original refund order. Now, it is clear that the explanation has nothing to do with the postponement of the date from which the interest becomes payable under 11BB. Manifestly, interest under 11BB of the Act becomes payable if on expiry of a period from 3 months from the date of original application, the amount claim is still not refunded. Thus, the only interpretation of Section 11BB that can be arrived at is that interest under that section becomes payable on expiry of 3 months from the date of your original application and not from the appellate order. So, since these are similarly worded provisions, a good case to say that, even under the GST law, similar interpretation could be taken up. And the interest on such a refund claim would be eligible. And I must say that in every case where there is a delayed refund given beyond the time limit, even if the refund is not given, if there is a good case and a sufficient quantum, please file an appeal for the interest if it is not granted. Do we have just 5 minutes? I have just one more case study. Sure. So I'll not be discussing this in much detail. But a very good point that I wanted to discuss is GST implication in case of contract cancellation. So this is a case where a e-bike company supplied certain bikes to another customer of theirs, and because that customer was into logistics business, they claimed the ITC thereof. Subsequently, certain defects were identified, so there was a dispute, and this supply was made in March 24, and the goods, because those defective goods could not be rectified, those goods were returned back in October 24. That's like beyond time limit, or let's say December 24 or November 24. So therefore, a proper credit note under section 34 was not, the company was not eligible to issue a credit note because the goods were returned in December 24. Now the tax head of this e-bike company is saying that, look, I had purchased a flat, and after 3 years I cancelled that flat when it was still under construction. So my CA filed a refund application for that flat cancellation, and the GST I paid to the builder, वो मुझे refund मिला है. ये भी similar case है, contract cancel हो गया, जो मैंने supply किया वो मुझे वापस आ गया है, तो मुझे इसमें refund मिलना चाहिए, क्यों नहीं मिलेगा? So that's the moot point of this, that whenever there is a cancellation of a contract, whether a supply of goods or supply of services, can I claim back that refund? Why are we discussing that is because we know that under Rule 89, there are provisions which are allowing, under the section 54, I would interpret that it says any person who has paid tax can claim the refund. So 54 does not debar a flat booking person to claim that refund. And under 89 specifically certain amendments have been made, wherein what documentary evidences an unregistered buyer of a flat has to submit to prove that there is a cancellation of contract and a refund is eligible to me. Having said that, if the legislature allows a refund for cancellation of a contract for service, what debars the authorities or what debars the taxpayer from claiming a refund for cancellation of contract for supply of goods? Can there be a distinction, artificial distinction, that the legislature can make between a supply of service and a supply of goods? Technically, if you ask me, answer is no. However, there have been instances where differentiation has been also made. Classic example is the inverted duty structure, where refund of inputs is allowed but input services is not allowed. However, this will have to be tested in the court of law. And again, to some extent, there's also a way out over here, is that one could look at, if section 34 is not possible, can I say that the recipient can issue a tax invoice to me and reverse back the tax and I claim back that ITC? That's a practice which is very common in the industry. And there's a circular 72 which is on the expired goods which are returned back to the pharma companies, etc., where the circular itself has given this fabulous idea saying that अगर expired goods आपके return हो रहे हैं, so it can come back in two ways. One is it can come back as a fresh supply, or it can come back as a return by way of a credit note. Could be by GST credit note or a commercial credit note. So that idea of making a sales return as a fresh supply has come from the circular. Now we all know validity of circulars, etc. I have my own reservations as far as the legality or the views of that circular is there. But nevertheless, I think this case also deserves some merit, and wherever there are goods return cases which are beyond the credit note timelines and the tax unfortunately is borne by one or the other party, I think a classic case to look for avenues of refund. And these are certain judgments which come to our help. First two are under the pre-GST regime, and the second, the third and the fourth one are related to the GST regime, where not exactly same, but yeah, similar, where service contracts, etc., were cancelled and proved that there was no provision of service or no supply of service, and therefore refunds would be eligible. Courts have held that refund can be claimed. So maybe some persuasive value to say that, look, even in case of cancellation of supply of goods contract, maybe worth exploring the avenue of claiming a refund. If you are not able to say that section 34 is there, and also in a lot of cases, if you are working with corporates, there are certain hard codings that are made into the ERP, So technically your inward supplies cannot be put into your outward supplies, and therefore issuance of tax invoices in quite a few cases very difficult. If it's fixed asset, maybe still possible, but if it's something related to inward supplies, it's very difficult for them to even create a code for a vendor as a customer and then make a inventory code for that raw material and show it as an outward supply, etc. And in those cases, you know, there's a deadlock. You can't really deviate your systems. You cannot really, you know, work around and say that I want to issue a fresh invoice and get done with this GST hassle. In those cases, probably a good case to try and get a refund under this provision. So I think that's it from my end. Thank you so much for being a very patient audience. I hope I have not created issues out of the issues, but try to give some thinking points, frankly, as to how we could really explore the provision and see if saying that the clients is not eligible for refund and nahi milega mushkil lag raha is a very easy answer. If we can really explore and go out of the box and try and see if our clients can, we can add some value to our clients, तो उसी में मज़ा है, उसी में अपना value as chartered accountant. So I think that was my basic attempt to try and draw your attention. So thank you so much.
Thank you, Nihar bhai, for your detailed presentations and covering the issues in refund practically by the case studies. So now I request my friend Aman to propose a well-deserved vote of thanks to our second speaker.
Good afternoon, members. On behalf of BCSC, I take this opportunity to extend our heartfelt gratitude to our speaker, CA Nihar Dharod, for today's highly insightful and engaging session on issues in GST refund. Nihar, your detailed discussion through a series of studies not only simplified the complex provisions of ITC and refund under GST, but also helped us appreciate the nuances of real-world challenges faced by taxpayers and professionals alike. The clarity you brought while explaining each scenario from SEZ operations and refund rejections to issues of time limits, appeals and interest truly reflects your deep expertise and practical understanding of the GST law. Your session has certainly enriched our knowledge and will guide us in handling similar issues with greater confidence and accuracy. Once again, thank you, Nihar, for sharing your valuable time and insights with us. We look forward to have such more sessions with you in future. Now I request members to kindly give a round of applause for Nihar. Thank you. With this, we conclude our session.